get started. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. Position disclosure here, added on FUBO. It's the only new swing position I have. I almost kept a little VXX short, but I liquidated it into the close for a small profit, so I no longer have that position on. So we'll talk about FUBO, talk about some stocks, talk about some markets. It is August 31st, so it's the last day of August. I couldn't be happier. Couldn't be happier that this month is almost over, that the summer is almost over. You might want to go to the beach. Sorry, I want the snow to come. I want the snow to come. I want the market to get exciting. The market hasn't been that bad, all things considered. You know, we've been on this upward grind. And there's been individual opportunity every day. There's been stocks that have been moving every single day. So let's take a look here. The S&P closed at 0. Is that right? Did we tick higher here into the close? Yeah, it looks like we ticked up actually 50 cents or so after the market actually closed. We actually closed down very small, but so small that here a 50-cent uptick after hours in the SPYs. This is back to flat. The Qs here are flat right now, and the IWM has a little bit of relative strength, up 0.36%. So what means that once again, we saw some strength in the IWM. So let's just take a step back. Let's review what we discussed in our morning meeting for accuracy, and let's review it to see if there's any lessons that can be drawn. So today's game plan. 1, I wanted to see if the IWM could resume its relative strength, right? Let's just go back to the IWM. IWM has had relative strength now compared to the Nasdaq for 1, 2, 3, 4, 5, 6 out of the last 8 trading sessions, and it was able to do that. With that said, our big picture game plan for today was to take a less is more approach to the market. Why? You see it better actually in the IWM and the Qs, but the market's a little bit extended to the upside. It's also August 31st, so this week, next week are traditionally 2 of the slowest weeks for trading. So we're a little bit extended to the upside in a bull market. What does that mean? It just means you want to be selective. You don't want to come in. I'm like a broken record, but I hope I'm saving people money by saying this. You don't want to come in and be shorting this market every day and fighting this market. You don't want to. It's at all-time highs. Don't think that you are good enough to say that today, August 31st, is going to be the top of the bull market that has lasted for so long. Don't think you're good enough to be able to do that, because I know I'm not good enough to be able to do that, and I don't think I've ever met anybody who is. So we really don't want to be coming in and doing much short selling, if any short selling. And we want to be a little bit selective on our long positions because the market's a little bit extended, particularly if you look at the IWM, which had that huge move on Friday, and you look at the Nasdaq, which had a really big move yesterday. So our indices are a little bit extended. All of that means that we should be taking a less is more approach, and we should really be focused on picking our spots. And another warning I made in particular was we really need to limit our midday trading. We should always be limiting our midday trading, because when you're trading in the middle of the day, you just have a worse risk reward and a lower probability of success. And if you're trading in that first half hour or first hour of the trading day, or even if you're trading into the close, you can get, you know, some better price action, some better movements as, you know, market on close orders are coming in and things like that. Midday price action in particular, you know, we generally want to be avoiding. Those skills today, which I could talk about, actually had a nice breakout through 11 bucks today that happened midday along with some option flow. But that's kind of the big picture. And then I talked about this Russell in particular. I really got my eye on this IWM after this ignition bar that took place on Friday last week, where we cleared 2 major levels of resistance, all on one trading session on higher volume. The Russell to me looks better now than it's looked in a long time. And even though it took a break yesterday and the Qs caught up, I want to see if the Russell can show continued relative strength. Because if we see continued relative strength in the IWM, we're probably going to see continued relative strength in energy, materials, financials, but also that tends to be, and it's funny because those are the bigger value names, but it also tends to be when we're seeing strength come into our speculative names, the craziest stocks that are out there. AMC, GME, Palantir, FUBO, Jumai, all that big classification of stocks. So I've been really focused on the Russell here, and what I said in the morning meeting was 225 is now a really important level. I want that 225 to act as support. However, because of the degree of extension in the IWM, where the ADMA here is still at, now it's at 223, it could act as like kind of a loose level. Meaning we could easily lose it intraday, but what I want to see is the IWM continue to close above 225. That sets it up, that creates a bull flag, it lets the ADMA catch up, and that should also provide continued relative strength in those sectors and stocks that I just spoke about, which is what I really want to see because I love those types of names from a trading perspective. And that's exactly what we got today. See, the IWM in the beginning of the day, that 225 was very loose, it traded back below it. A little relative weakness here at 10 o'clock in the morning, but by 10:45 we recaptured it and we hung out above 225 all day. This is not great looking price action on the intraday on the IWM, but if you're looking at this on the big picture, it's exactly what I want to see. We're holding up above 225. We're starting to flag out here. That ADMA is starting to catch up a little bit. Let's take a look at the Nasdaq. Yeah, Nasdaq just kind of a tight day. Is it an inside day? It is an inside day. It's an inside day for the Qs. Really tight there. Apple, yeah, Apple, nice inside day. This is also sweet. We spoke about in the morning meeting. I like the idea of going long Apple versus 150. If you can get stock somewhere between like 150.50 and like 151, I think is a good price. So it didn't quite get down to that. The low of the day is 151.29. So I didn't trade any Apple today, but this is exactly what you want to see after that massive breakout. I mean, all these markets are just looking so bullish when you look at the underlying. It's hard for the markets to go down when Apple is breaking out above 150 resistance and holding above 150 resistance. It's hard for markets to go down and individual stocks to go down. You know, one thing that we've seen in June, July a little bit is we saw big tech perform really well, but a lot of stocks go down. Well, it's going to be hard for that a lot of stocks to go down part if the IWM is being so strong. So if you're a market bull, this is what you want to see. Obviously, it's always a two-sided story between the bulls and the bears. The bull case right now for this market, though, is you got buybacks coming back into place. You've got a ton of cash sitting on the sidelines. You know, the bear market argument right now is the Fed and tapering and stuff like that. I do want to pull up actually Pat's morning note really quick here into the meeting. This is a huge part of my daily research is reading this. I just wanted to go to this one chart that I think is like one of the most interesting charts in the market right now. That is from Pat's note, and we spoke about this in a couple of meetings recently, that this chart right here, that shows that the forward PE in this marketplace has actually been declining really over the course of this last earnings season in particular. Forward PE has been declining. Why is that so interesting? Because that's more of a value metric, right? And we're seeing that value metric come down, right? So the market's getting cheaper, but the market is getting cheaper on that forward PE basis as it's continuously upticking and continuously making all-time highs. So for me, that's another argument for the bulls, though Pat's note also notes that you know, you got some analysts over at the big banks who are saying that, who are maintaining their price targets even as that's happening because they're expecting lower multiples in the future, which is what tends to happen when interest rates go up, right? Interest rates go up, which could happen if inflation stays high, might have to happen eventually. As interest rates go up, multiples tend to decline. So it's definitely something that we want to keep an eye on as this market's working our way higher. But I think that's like the most interesting big picture economic fundamental chart that you could pull out right now. Let's see here. Individual stocks today. So one of my ideas for today, and it was my best trade of the day, was FUBO. Talk about FUBO 28. I had FUBO 28 on my radar as one of my ideas for the day today, even before the news came out. And then while I was doing the morning meeting, actually like literally while I brought the FUBO up chart in our morning meeting today, a little bit of news came out. So I was talking about $28 here in FUBO, especially if we start seeing the relative strength come back into the IWM. $28 as a breakout with volume or ideally option flow. We didn't see any option flow come in, at least not that I noticed, but you definitely had the volume that you want. Again, volume is one of our key layers of probability. You don't need to have high volume for a trade to work, but if you have a trade set up and there is high volume, you're gonna have a higher probability of success. The flip side of that I would also point out is that volume in and of itself is not a trade. You need an actual trade setup. So for me, the trade setup was the $28 daily breakout. The level is a little bit loose, but it's one of these, what I call like a closing basis levels. So we needed to close above 28. So 28 bucks is the spot that I'm looking at, and look at the consistency of this volume. I measure volume compared to just like a typical day, right? So this opening volume on the first bar of the day, so much stronger than yesterday. And then look at the consistency of the opening volume. Typically, it dries up really fast. Here, we're seeing volume in FUBO that is exceeding double the same bars from the previous day. That's the opening consistent volume that we really want to see. And you can see it really with almost any of these previous trading sessions. The volume here in FUBO was beautiful, it was phenomenal. I originally was trying to go long versus the pre-market low, which was 27.30. Pretty quickly, the day low of 27.59 was put in, so I was able to raise my stop to that 27.59 low. The breakout through 28 bucks was great. Created a little inside 5 and up for continuation here. Trended higher, gave us a move all the way to 29.54 here at the end of the day. It's a good-looking closing candle. Volume here is decent. I actually would want the volume to be a little bit better. You can see it did kind of die out midday. It is also August 31st. But this looks so solid that I had to keep some of this. I've been actively trying to not add too much new overnight long exposure, but I added a little bit of Roblox yesterday, and I added a decent amount of FUBO that I'm keeping overnight today, just because this trade just paid so well. It's by far my best stock of the day. But I'd be a joker, I'd be a faker if I didn't talk about what I didn't do as good of a job with today. I got into a little bit of a fight here with Jumai, which is exactly what you shouldn't do. And it's funny because I think I literally just spoke about this at an afternoon meeting. I know myself so well. I know exactly when and how I tend to fight stock. So I got a little bit excited with Jumai today, early on in the day here. The opening volume bar was okay. It was a good candle here. We know 21 is important. It came back beneath 21, which makes sense because it's extended on that small time frame. And then it's set up with this inside 5. And normally I don't love this rest bar here unless this first bar is on huge volume or news or something like that. But 21's a big level, and we were seeing a lot of these speculative names really starting to catch big bids. And this is another one of these stocks that I kind of keep in that speculative type of space. So Jumai here is one of those types of stocks. You got FUBO, you got a bunch of those other names really ripping higher. I see this thing inside 5 here after it attempted to break out but couldn't do it through $21. 21 bucks, you can see pretty simply is a resistance level for FUBO. It's attempting to build out a reversal. It actually looks pretty decent. So I took the inside 5 trade here on this break higher on the third candle. And my problem is, this is a problem that I have with my own trading, and I have no problem talking about my own problems in trading because I am by no means a perfect trader. I've spoken to you guys about how and when I tend to fight stock. I tend to fight stock when I don't truly know that my idea is wrong, right? And I know, and it's funny because I did such a good job getting out of skills yesterday, which I'll talk about skills in a second. I know that I tend to fight stock if my stop loss has not been met with the ADMA yet. So this is a simple inside 5 continuation trade. So I'm buying the break of this inside 5. The appropriate stop loss is the other side of the inside 5. And I bought size with a plan of using that as the stop. I could have bought less size and used the low of the day. Still would have gotten stopped out. But for me, I really wanted to see the momentum come in. I was excited because FUBO and so many of those other speculative names were really going. And I was like, Jumai is going to go too. It's going to break 21 also. Look at this nice little rest candle here. I'm going to take advantage of the momentum when it comes back in after this period of rest. So I bought heavy versus this stop loss. And what I ended up doing was I got stopped out of some stock when the trade failed, but I did not get stopped out of everything. I said to myself, I'm going to give some of it a little more room because the ADMA hasn't caught up yet, and I'll see how it pivots above the low of the day. And then guess what? It did not pivot above the low of the day at all. So I got stopped out of some stock on the way down. It breaks new lows. I get stopped out of more stock, and then I start fighting it a little bit. I fought it here one time. I got stopped out again. I churned it another time. This is just garbage trading, and it's all because I wouldn't let myself have the stop for the full position here because the ADMA didn't catch up yet. I've done this before. This is a mistake that I've made in the past. I cannot allow myself to make it again in the future. So that's why I want to, go over publicly my mistake so I can call myself out for it. So hopefully I don't do it. And then guess what? I honestly got a little bit lucky. Whatever this rip higher here was, I know Felipe was like, I'm going to take a little scalp trade here at 20 bucks because he knew I was suffering. And he came in, I think, bought $20.01. What a great buy. And then somebody just did some sick market buy here that brought this thing all the way up to 63 cents. I had offers pegged out all the way up that got totally filled. Didn't get out of everything. I eventually got stopped out of the remainder of my stock actually on this bar. But I got a little bit lucky here that made my loss in the stock not as bad as it would have been otherwise. And it's just bad trading. It's bad discipline, it's bad risk management, and it's a bad job by me. So I want to call myself out on it, and I got a little bit lucky, and that luck made my loss not nearly as bad as it should have been, but I still lost more than what I was initially planning on risking in the stock. So that's a really bad job. So I did a great job with FUBO. It made me really good money. I did a really bad job with this Jumai, and I need to learn from it and move on, as we all need to learn from our mistakes and move on when they happen, because they do happen. Another one worth mentioning that I was not involved in today was skills, because it was my idea of the day for yesterday, or one of my ideas of the day for yesterday, right? $11. We spoke about this level. I think I spoke about it in the afternoon meeting really briefly as well. Proud of myself on the skills because I did not make the mistake that I made in Jumai today. Skills yesterday, I bought a lot of stock above $11. I got my one-to-one kick. I put my stop loss in at the low, even though the ADMA hadn't caught up yet, and I got stopped out. Well, guess what? Today was the day that it worked through 11, and it makes sense because all the speculative names today were really strong, except Jumai. So skills here, here's your ignition bar taking place at 9:45. You can see the relative volume is okay. It's not fantastic. But if you use the low of this 5-minute bar, which is what we call an ignition bar and a breakout as your stop loss, it's 1086 is that low. So you never actually get stopped out in this pullback. And then when we see the option flow start hitting and the volume pick up and this thing start ripping up to $12, which if everyone remembers from yesterday's morning meeting, my target number 1 for skills was 12. It went to it today without me. If you took that trade, you never get stopped out. It works perfectly. So that was really nice. I know a couple of you guys have skills, so worth going over. This stock just has a lot ahead of it, though. I don't like the company that much. I want to say that. I trade better when I'm going long a stock that I actually believe in. I don't believe in this one, but it is one of those speculative stocks, so we should keep an eye on it because it woke up today on really big volume, so they could start squeezing it higher. They could start squeezing everything higher. They're already doing it with AMC and Jumai, but you got, in GameStop. But you got resistance at 13. You got resistance loosely at 14. You got resistance at like 1550. There's just a lot of resistance levels on the way up in this skills that it's going to have to contend with. So trying to think if I have anything else that I really wanted to go over. We spoke about Apple. We spoke about the markets. I know Space was mentioned this morning because it got an upgrade. I just don't like this company at all. But there was a decent trade here above 26 bucks in that Space for people who went after it. It wasn't really one that I had too much of an interest in, but that upgrade really got it cooking. But yeah, FUBO was the trade of the day, and you know, we're in a less is more market environment right now as we're at the very tail end of August, and I'm looking forward for ski season. So that's all I got for you guys. Happy to answer any questions that anybody has. First thing I'm seeing here is from Robert. This is what you described about big picture economics with the PE ratio. Do you think it will change if the Fed starts tapering, or we should be prepared for market correction? Okay. So Robert's question here goes back to what I was just talking about when I brought up, Pat's note. Where is Pat's note? Sorry, 1 second. There it is. Robert's question stems off the comments I made about the forward PE multiple from the chart here that is from Pat's note. So we can have a quick discussion about basic fundamental stuff in markets. I don't consider myself to be an expert in fundamentals. Luckily, we got some guys on the team here who have really good fundamental backgrounds, who I rely off of. You know, my approach to trading has more always been on what I call the qualitative fundamental side, where I'm really focused on, you know, what does that company do, what sector are they in, what does the growth look like of that sector, what does the management team look like. Those are qualitative fundamentals. Real hardcore fundamentals, for lack of a better term, are more about, you know, valuation, right, and things like a price earnings multiple. So the forward PE multiple is a number that I do peripherally pay attention to, big picture for the S&P, and you know, basically when you're looking at a PE multiple, pretty straightforward. You know, stocks trade at a multiple to their earnings because markets are a forward-looking mechanism, and you know, you're pricing in forward growth and expectations, and you know, stocks trade at multiples, right? So oftentimes you'll see like a tech stock trading at an insane multiple, and that's because the market, what the market is saying here is it eventually expects that stock, that the business of that company, that their earnings will eventually catch up to the multiple in which it's trading at. The big one that everyone likes to point to is Amazon. For years and years and years and years, all the Amazon naysayers were talking about that it just trades at an absurd price from, you know, a PE basis or from a fundamental perspective, but they just had the revenue growth and the revenue growth and the revenue growth, and that is one of the big things that has really transitioned the market to kind of the modern market that we are dealing with now. So as a general rule, though, when interest rates go up, the average market multiple decreases. So I don't know actually what the historic number is. If you go back the last 100 years or so, I think it might be 19, something like that. I don't know if Stefan's here. I'm sure that he knows the answer to that question. But we have not been in normal historical market environment recently. We've been on one of record low interest rates. So the record low interest rates creates a higher multiple. So what we've seen, you know, more regularly here is we've seen the multiples getting into, you know, the low 20s. So as interest rates increase, right, your risk-free money becomes more attractive, right? Like let's just say that the average return for the S&P historically is 8%, and it's somewhere around that. And obviously it depends on if you're looking at it with inflation or without inflation. Let's say it's 8%. Well, that 8% comes with a ton of volatility. Or what if you could own treasuries at 5%? It's backed by the government. It's guaranteed. You're not going to get any volatility. A lot of people might be interested in having a treasury bond that would yield 5%, as opposed to being in the S&P where you're expecting 8%, where you get a little bit more, but you have to deal with a ton of volatility. Well, we're nowhere near 5%, right? We're coming off of 0. And as tapering happens, and tapering can potentially in the future lead to interest rates actually being increased by the Fed, then what that's going to do is it's actually going to lower that multiple. I think that that's what the analyst at Morgan Stanley is really talking about, right? He's talking about like, well, earnings really improved, but I'm keeping my S&P target the same because I think that the multiple is actually going to come down because interest rates are going up. So the interesting thing about this chart and why I'm speaking about it is the earnings reports were so fantastic over the course of the last quarter, last couple of quarters, but in particular this last earnings report that we just got out of, that even as the S&P has been going up, the forward PE is actually declining because the earnings part of the PE went up pretty dramatically. So it's actually making the market cheaper even as the market's going to a higher price. And that's just one of the things that I think is that's what makes it the most interesting thing about the market. So Robert's question, based on everything that I now just discussed in more detail, is if interest rates go up, should we be prepared for a market correction? Maybe. Maybe. So we did see the taper tantrum when Jerome Powell was a new Fed chairman. That's this pullback here at the end of 2018, and he started saying that we were starting to taper. I think we had already been starting to taper, and he said that we were nowhere near normalization, and the market got very scared about that and had this kind of big sell-off. The longer that I've been trading, the more I realize that the Fed is everything. It really is. What they choose to do with interest rates and quantitative easing and everything else, it really heavily dictates how this market's able to perform. With that said, I've also seen a lot of historical data that shows that the market doesn't necessarily go down when tapering begins, or I believe I've seen historic data that shows that when the Fed starts increasing interest rates, I think the first 2 Fed hikes historically are actually usually coupled with an increase in stock prices as well. And then it's only when you get a little bit deeper into the rate hiking cycle that you actually start to see deterioration in the stock market. Now, every situation is unique. This is obviously a very unique situation because we're coming off of 0 interest rates and historic quantitative easing. So this time is not necessarily going to be the same as other times, but it's information that we want to keep in the back of our head. And we've definitely seen when the TLT starts moving in a really big way, honestly, in either direction, we've seen this. We've seen that the big, fast moves in the TLT in both directions now have led to little market pullbacks. So I think that what the market cares more about anything is optics, is preparation, and is speed. And the Fed has just gotten better and better and better over time of really just showing their hands and slowly nursing the market off of the teat of the free cash that it's been pumping into the economy for so long now, that I think that they can do a good job here without necessarily doing a ton of damage to the market right away. But that's just all big picture speculation. I don't know. What do we know right now is that, well, Jerome Powell said that he's going to be doing tapering starting this year. But we also know that even like the most aggressive expectations on tapering still have that going out for many months. There's still going to be Fed bond buying that's going to be occurring and that's still more cash coming into the market for a long period of time, even as tapering begins. So there's still going to be more cash that's coming in. So that's all stuff that we need to pay attention to. So what's the bottom line here? Is it going to lead to a correction? Or is it not? I don't know. I don't have a crystal ball. I can't tell you the future on that type of stuff. This is all information that we're constantly paying attention to as it adjusts on a day-to-day basis. This is why Pat's note is so important to me from thinking about the big picture positioning on a lot of stuff that I'm doing. But at the end of the day, what I always talk about is you can develop that qualitative thesis for the market. I think the market should go up, should go down. I think this stock should go up, should go down for X, Y, and Z reasons. The technicals will tell us the execution. So if tapering or eventually interest rates are going to really change the market, it'll show in the technicals. And what are the technicals showing me right now? The technicals are showing me a market that's at all-time highs. The technicals are showing me some money rotation, possibly coming back into IWM, possibly coming back into value plays, maybe seeing some more of those crazy stocks moving again a little bit. That's what the technicals are showing me and where I need to focus. And I'll continue to pay attention to all the high-level stuff. It's a huge part of my research. But at the end of the day, okay, tapering starting tomorrow. Are you going short? I'm not. So that is the answer to your question there, Robert. Jordan here talking about a stock that pains me, which is this DBX. I had a really big swing position in DBX that got stopped out of at the low on this day. I was long versus this pivot low of 24.22, and the low of this day is 24.07. I got stopped out. Bam! Look at what it's done ever since. So everyone can get stopped out at lows. But anyway, enough about me. Let's talk about your question. 31.50. So you're looking at a little breakout here around 31.50. What's this high? That high is 31.49. What's yesterday's high? 31.40. Okay, so you're rounding out to about 31.50 is a little bit of a level in a good bullish company, in a good bull market that you want to pay attention to. You decided not to take it because the volume was low. I figured if it did break out, it would fail. Do you have any advice for what I would have done? Sure, this is a great question. So you decided not to take it because you didn't think you'd be able to get continuation because the volume was so low. I love the thought process there. I love how you're thinking about the different layers of probability that affect a trade that you take. I love that you recognize that this trade had a lower probability of success because of like the time in which it was breaking and the low volume, and that you made a conscious decision based on a lower probability of success to not take the trade. I think it's a great thought process. I would also say that volume is only a layer of probability. So you don't need volume for a trade to work. You're just going to have a higher probability of success if the volume is there. So that's that. So you still want to assess for yourself. You know, maybe still take the trade, but take it with less risk. That's something that I'll do, right? So like I like to skew my risk on my trades based on probability of success. So this trade's going to have a higher probability of success if the volume's there. I wanted to risk $500 on the trade with the volume being there. The volume's not there, so I'm just going to risk $250 on it. I'm cutting my risk amount. So it's another thing that you could do there is just take lesser risk on a trade that you still think is a decent trade, but doesn't have all the layers of probability that you're taking, that you're looking at. But I think it's a really good idea. Next from YouTube, we got really easy. What do you think about HASI? HASI. So first of all, I can tell pretty quickly this is a fairly thin stock, right? For a $60 stock here, the volume is pretty low. It's about 350K. You can also tell based on the 5-minute, you got little gaps here on the 5-minute, which I'm usually not a fan of trading stocks that have gaps on their 5-minute because they can't take a ton of size because of liquidity issues on it. But from a pure technical perspective, this thing getting above 60 bucks here, really this thing getting above 58 on a closing basis was solid. I know it did it one other time here and then failed. But this thing getting above like 58 and now really starting to clear above 60, from a big picture technical basis, this thing looks solid. I have no idea what this company is, Hannon Armstrong Sustainable Infrastructure Capital, so I can't give you any feedback on the fundamentals of the company. But from a pure technical perspective, above 60 bucks, you're looking pretty good here. I would not want this thing to get back below this low from 2 trading sessions ago, 57.80. You get below 57.80, you start potentially having a problem. See, Glenn? So that is the answer to your question, sir. Next here from Jack. How do I feel about EH? That's that EHang Holdings. What does this do again? Pat, you remember what EH does? I know we've looked at this in the past. You don't remember? How do I feel about EH? I can't remember what they do. That's why I'm asking Pat. 28 bucks looks like a solid level. Like many of the other Chinese companies, the chart here technically is starting to look a lot better. Everything was marked as a bottom when Jim Cramer got on TV and said it's your last chance to be able to sell Alibaba and Chinese companies. Since then, a lot of them have reversed. This thing's starting to look a lot better. I'm not really familiar with the company. Autonomous aerial vehicle technology. I hardly know what that means. So it doesn't really help me too much. But yeah, we start clearing above 28 here. You're starting to break some resistance levels, and you're really reversing that downtrend into an uptrend, and it's looking a lot better. I'm always very cautious about the Chinese companies that I don't consider to be the Chinese majors, because you never know when the Chinese government could come out and change things, or maybe they're doing some wacky accounting or something like that. So I definitely prefer the Chinese majors. But from a technical perspective, starts looking good here above 28. Michael asking me about SoFi. Thoughts on picking up some SoFi down here for a swing versus 1356, the low of 817. Man, this SoFi has just been such garbage. It's hard for me to really advocate buying this thing. I have a position in it that I'm already involved in it, so I'm going to continue to manage my game plan on it. This has been the absolute worst of all these types of companies. You've got UPST, which is a similar type of company, had a stellar earnings report and has gone through the roof off that big picture consolidation base that it had. You've got Lending Club, also similar but different, had this huge uptick on its earnings at the end of July, has consolidated that while grinding higher for most of August, and then had a huge breakout continuation above 30. That's what the other similar companies are doing in that, you know, new financial space. And then you've got this SoFi that reported not so good earnings. They missed on their earnings expectations, which was the big killer of this. Got below $15 support, then $15 support became $15 resistance when it was able to retest it here on August 25th. It has showed relative weakness compared to every index, compared to every sector. You know, like, I look at this company sometimes and I'm like, well, should it trade as a tech company or should it trade as like a finance company? Guess what? It doesn't trade with tech companies or finance companies, because when they go up, this thing goes down. It doesn't go anywhere. Even today and yesterday, when we started to see the speculative stocks catch a bid, which you might think includes SoFi, this thing still can't catch a bid. It's disgusting. With that said, it has started to establish a little support, excuse me, around $14. If you can get a higher low here versus that absolute low at 14, and it can recapture 15, it starts to look better. I just don't like it. It should have been doing that already today. Like you potentially gave me that higher low off 14 yesterday. All the spec names caught bids today for the most part, and this thing couldn't get out of its own way. So you got these moving averages here. They're starting to weigh on it. You got all this resistance in the way. It's really hard, Michael. So to come in and to risk, 60 cents on this versus this absolute pivot low, I can't really advocate it on a technical basis. I know that this is going to have some more fundamental catalysts soon. They've got a bank charter that they're trying to get approval on, which could act positively for the stock. I still don't hate it from that big picture kind of qualitative fundamental thesis with some of the stuff that they're trying to do, but that last earnings report was definitely a real damper on the momentum that it needs to have, and I hate the relative weakness. So it's tough. It's tough, Michael. Jorge, statistically, interest rates and stock prices are negatively correlated. Yep. Jerry, what is the best way to adjust change orders already entered using hotkeys and light speed? For hard to borrow stocks, it's a pain. Using the point and click might be best for Pat. Yeah, I would definitely ask Pat I know that for quick order adjustments, if I just need to change by small amounts, I have a page up and page down hotkey. It lets me increment and decrement my bids and offers by a penny. I know it doesn't help you with your hard to borrow situation where you can't have both the orders out at the same time. And even though I'm a hotkey guy, I'm all about the hotkeys. That is the time where I do point, click, cancel an order to put the other order out. Scrolling down here, Diego saying about the Fed. No one knows. The Fed has never had a balance sheet over $8 trillion. Yep. Even $4 trillion was shocking in late 2018. It's all fake money now anyway. Sometimes I look at the money and I'm just like, it's just, does it even matter at this point? Like, I almost ask myself, like, does the deficit even matter anymore? Does the Fed balance sheet even matter anymore? We're just making all this stuff up anyway, right? Next from Marty on Snap. I like that the Snap got back above 74. It's the first thing I can tell you about it. It's over the 8, 21, 50 SMA, MACD, RSI curling up bullish. What's holding it down? I mean, you know, sometimes when these stocks have big earnings reports, they just need a lot of time to back and fill off the new price. Like we saw Google on 2 spectacular earnings reports spend an entire quarter basically digesting the news, right? This was one spectacular earnings report that it had back here in February, I remember, and spent basically the entire quarter almost, you know, there's 2 full months here of pure consolidation before a real uptick occurred. I thought that actually happened a second time on it. Here was another one actually, back at the end of last year, November last year. Big uptick, spent the entire quarter just about consolidating it before it started to trade higher. Then was the next earnings report in February, big uptick. Took 2 months to consolidate that new gap up, those new price levels before it was able to start continuing. So sometimes that just happens. I do like Snap. It's my favorite stock of the social media companies right now to be involved in. The fact that it reclaimed 76 is, I think, a big deal here. Sorry, that it reclaimed 75, I think, is a big deal. It's starting to look a lot better now that it did that. Your next bigger resistance level that's got to clear is this like 77.50 area, 78 area, where it starts looking good. So I don't know if it needs a catalyst or something like that to do it. Big tech's been strong, so we'll see if we can get some follow through. But I think it looks good. So I would just stick with your game plan and try to be patient. I struggle to believe that the market will go down for a long period of time when the entire full-time employed American population weekly has money put into retirement funds that buys the market regardless. Oh yeah, I mean, so first of all, markets can go down, right? We saw that happen with coronavirus. Markets can go down. They can go down sometimes very quickly. It has happened in the past. Fear is a really strong emotion. But big picture, like very broadly, it's easier for markets to go up than it is for them to go down. And there's a lot of reasons behind that, especially in the modern market, right? You've got companies buying back their own stock. You've got plenty of people out there who are just, you know, constantly putting stock monthly into their, you know, retirement accounts, dollar cost averaging. The flip side to that argument that people make is that the baby boomers are all retiring and that they're going to be liquidating stocks. But I think a lot of that's happened already, you know, because a lot of portfolio management, balancing, financial advisor stuff has, you know, the boomer population, you know, slowly liquidating equities and kind of buying treasuries to, you know, have less volatility in their portfolio as they go into their retirement years. So people do make that other side of that argument. But yeah, you know, you do have kind of a constant underlying bid. Another really interesting thing that, you know, we're starting to see, especially with how strong the market's been, is insider selling. You almost don't even need to do insider selling. And if you're a wealthy person who just owns a lot of stocks and owns a lot of assets, you also, and let's say you wanted to buy a new pool in your backyard or something like that, or, you know, something that's going to be expensive, these guys aren't even liquidating stocks to do that anymore. What they're doing is they're taking low interest rate loans from their brokers so that they don't have to liquidate their stocks, because if they liquidate their stocks, then they're going to have to pay taxes on them. But if you can just borrow against your portfolio at 1.25%, why liquidate your equity portfolio and pay capital gains taxes on all the money that you've made when you can just take a loan out at 1.25% on your stock and then never actually sell? So you got reasons for less selling, you got reasons for buying that consistently comes in, you've got constant Fed support, so you got all those reasons that, you know, it definitely makes it easier for markets to go up and go down. With that said, markets are feedback cycles. Look at what we just saw in the crypto space. People were doing the same thing in crypto, which to me that's nuts. I kind of get it if you own a lot of Procter & Gamble and you want to take a loan on a small percentage of your stock portfolio as a wealthy person at a really low interest rate to go fund your new pool or whatever it is. I kind of get it, but you have got to be absolutely nuts if you've got crypto investments that are on leverage or something, and then you're like, I'm going to take a loan against my Bitcoin to go fund my new pool, because the crypto space is moving like 40% a month, and you get that downtick, and then you have all those forced liquidations that are coming in at $30,000 in Bitcoin right when the bottom comes in, and then it can start to go. So yeah, you know, just a lot of things that we always want to be thinking about when we're thinking about big picture, you know, market dynamics. Marty on YouTube, Tesla. I almost started trading Tesla today. Lots of bullish institutional chatter, but I didn't like today's wick. Does the 821, I look at EMAs, get tested first, or does it keep going? Yeah, so I mean, I got trading rules. Someone asked me about Tesla in the morning meeting today, I think, and I said I'm not buying Tesla. The buy in Tesla was yesterday. We called it out in the morning meeting, 715 or 717 or the two potential buy prices in Tesla. You got Tesla now at 715, it's at 736, you're sitting pretty, you're counting your dollars, and you're assessing your game plan for reward maximization. At 736, if you come in and you buy, you have a significantly worse risk reward and lower probability of success. It did trade on good volume today. It is a good looking chart. Does it need to price correct back down to the moving averages before continuation? I honestly don't know. It doesn't have to. But for me to buy it, I would want to see a setup first. And a setup could be a price correction back down to those moving averages, followed by some sort of bottoming tail, high or low, or it could be another bull flag that occurs here above those resistance levels. That's the type of stuff that I would be looking for to get involved in this chart. Some CC64YT, what do you think of KWEB? KWEB, this is the ETF, right? I like it. I know we looked at, I don't remember exactly what the holdings are, but I know we looked at this, I think, one day. I think it's got Tencent and Alibaba and JD. It's got all the ones that I like. I am bullish on China. I'm not afraid to say it. I've been bullish on China for a long time. I'm probably going to be bullish on China for a long time. We're talking about the largest middle class in the world. And look, I don't want anybody to think I'm not an American patriot. I am an American patriot. I love this country. But there is no way in my mind that China is not going to be the richest, most powerful country in the world. It's just a matter of when it happens, not if it happens, and what the world looks like when it does happen. You know, it's a small world now, and I hope that we can all kind of work together hand in hand for everyone's prosperity, though I do see that we're going the other direction in a lot of ways, which is definitely concerning. 52 bucks is a level here in this KWEB. We wanted to get above. The daily chart looks so much better now. You know, I've had the fundamental idea where I've wanted to be long these stocks. Now we're getting the technical setup that's telling us that we can be involved in them. So, looks solid. eHang Holdings is a limited autonomous aerial vehicle technology platform company. The company design, develop, manufacture, sell, and operate AAVs, etc., flying UFOs. From Max Tan on YouTube. What do you think of Jim Cramer stock, PSFE? I didn't know it was a Jim Cramer stock. I don't really follow him too much. PSFE is another one. You know, mind-blowing to me how garbage this thing is traded. Because I feel like it's a interesting company. It's another one, you know, almost similar but different with what that SoFi has been doing. Stock needs to prove itself. You got to start clearing some levels. First is $8.50, then is $9, then it's this gap above $9.50. I like the idea of being long it, but it's got to prove itself. and it hasn't been able to do that. I hate the relative weakness of the last couple of days. A lot of these other broken down speculative names that are super beaten up were able to catch bids. This was not able to. I don't think you can buy it until it proves itself. Let's let it prove itself, and then we can get involved. Definitely been a disappointing one, that PSFE. Back from Sebastian, can I check VAX? 240 in NVAX is your spot here on a closing basis. You want to start seeing closes above 240. I think it looks decent. It's building out a bullish consolidation here, but it needs to go. Entered in the market open today in 32.5. I don't know what that means. 32.5, and it was going well when it reached 245. Maybe you just mean 235 even. I'm not sure what you mean on the initial one. Anyway, when it got to 245, I moved my stop loss to below yesterday's high. Okay, I don't like that as a stop loss. And support, but it stopped me out. Yeah, I don't like that as a stop loss. I know you're not part of the team, Sebastian. Maybe you should consider becoming part of the team, because what I would recommend for you to do if you were a part of the team would be to have a watch of my game planning class, which is where I go over my trailing rules and how I implement a trailing stop system. Now, it's not to say I may have gotten stopped out actually at a similar price here on the break of this pivot. It depends what time frame I was trailing on, but I wouldn't be raising the stop based off of yesterday's high. Now, it's not a terrible stop because you got a pattern of higher highs and higher lows here with this last pivot, or even this last pivot, or honestly even this last pivot if you were trailing it really tight, where you could have gotten stopped out of. I have specific rules on how I trail, but I also somewhat subjectively trail looser or tighter based on how much I like the big picture and how much I like the story and how much I like the market. So this one I don't really have too much of a thesis on, so I don't know if I would want to trail it really tight or trail it a little bit loose. If I was trailing it really tight based on my rules, I could have raised my stop to as much as 240.50 and gotten stopped out. If I was trailing it a little bit looser, let's see what a 15-minute chart looks like. If I was trailing a little bit looser, this pivot low here at 10.15 may have acted as my stop loss, in which case I also would have gotten stopped out. If I really, really, really believe in it, then I'm trailing it. I'm not trailing it. Maybe I'm trailing some of my position, but some of my position I'm giving to my original out to see how it closes. And it didn't close too great, to be honest, so I don't know if I would have kept it. So that's index. What do I think of skills? So we spoke about skills already, so I'm not going to talk about it too much. I don't like the company. I love the day-to-day. Beautiful day-to-day. Ignition bar. It cleared through the $11 that we've been consistently speaking about. So that one's solid there. That is your own thesis, Chinese thesis, not the entire floor. Not of the entire floor. Okay. Mike, yeah, for sure. You know, my ideas not only should my ideas and my thought process not necessarily be yours, they shouldn't necessarily be yours. Did I say that right? You know, everyone needs to come up with their own thought process based on how they analyze the data that comes in. But you're looking at a population size that dwarfs the United States and a government that, for its many flaws in China, works significantly more efficiently than ours does, and works hand in hand with that development and that growth, whereas ours just holds everything back consistently because all people do is fight here. How do you initially decide on pre-market low stop or after 9:30 low stop, like in FUBO today? Does it depend on if there was news? That's a good question, Mike. That's a really good question. The answer on it's a little bit subjective, but one thing that's not subjective is once I make the game plan versus that stop, I got to stick to it, which again, I did not really do that with Jumai today, and it cost me some money. How do I do that? It definitely depends a little bit on if there's a news factor. It depends a little bit on pre-market volume, and again, if that news occurred pre-market. So, and also depends a little bit on spacing that I feel like my idea is right or wrong on. So like the FUBO today, the news came out pre-market. There was a pre-market low down there at 30 cents. I know that stock can be very volatile, so I felt that that was the appropriate space for the stop loss for my game plan today, and that's why I chose it. And then once I had established, and again, a lot of times what I'm doing is I'm starting with that stop loss, but what I really want to do and what I'm really planning on doing is increasing that stop loss as soon as the stock actually gives me the opportunity to do it, which is what I'm looking for. It happens pretty quickly sometimes. Like with FUBO today, you know, after about 5 minutes or so, I was able to raise my stop to the low of the day. So that's what I'm trying to do. Tan Hao here in ProDesk. What do you think about to short JD and TSM since a shooting star? So JD's been a monster. It's been the winner, but it's extended here. So put in a shooting star. What do I think about shorting it? I don't like the idea of shorting anything right now. Market's too strong. We're at all-time highs. So I don't love the idea of shorting it. But there's a trade here. If you can get good pricing versus today's high, there's reward potential in this thing on the downside to 75. I would just be very selective on shorts. TSM as well. TSM's a little bit extended here, you know, at 120, ADMA at 117. I don't think the short in TSM is a great risk reward. If I was going to short one or the other, I probably would short JD first, but I really like JD as a company. Sean here, do you trade or hold AMC? I am currently short AMC to the dismay of the Wall Street Bets apes. While I am short AMC, I am light, and I'm actually rooting for it to go up. AMC is currently my only swing short, I believe, based on my position disclosure from earlier. I'm rooting for it to go up because I can trade it short at a higher price. This thing has been such an amazing trading vehicle for me. I've done pretty well with it overall to the short side. We had this wedge here to the short side that broke down. That was a great trade. $60 was pretty big resistance here that I was shorting into that $60 area somewhat consistently. Then it created another, where was that next short? It was off this next wedge that broke down. That was another good short. So we've done really well as a team trading AMC to the short side. I have not been actively trading it in the low 30s. Not to the short side. I've called out, even though I haven't taken them, I've called out several long trades here on the way up. And I've been consistently talking about how I called out this breakout in AMC. I called out the breakout in GameStop through 167, which was a fantastic trade for people who took it. I want this thing at higher prices. It looks like higher prices. It's going to create a really good trading vehicle for me where I can risk the money that I've already made in order to make more. Fundamentally, I think the stock belongs to $4, but fundamentals, they don't matter until they matter, right? If more people want to buy it than sell it, it doesn't matter that I think the company is worth $4. It can go to 70, it can go to 100. But we'll see if that's able to happen, because the last time it got to those prices, the company used that as an opportunity to raise more money, to increase the float, and then AMC basically sunk its own stock. So at a certain point on the way up, you're going to start actually fighting the management of the company. Even though I know that the CEO is smart, because he's out there trying to act like he's, you know, running through a field of flowers with the Wall Street Bets guys, because he wants you guys pumping the stock up so that he can use these crazy prices to raise more money. So sure, let me give away free popcorn and do whatever other gimmick I can possibly do to try to keep you guys happy, so you guys can get the price higher, so I can raise more funds and sink the stock back down. But from a technical perspective, AMC, GameStop, they look great right now. They look so good. So you're better off being long than short right now for the time being. With that said, I am short small. All right, last couple of questions to start wrapping up here. Do you run a live day trading room? Yes, Art. Reach out to info@t3live.com. Ask how you can get involved with the ProDesk virtual trading floor. The ProDesk virtual trading floor is the virtual trading floor that I run. What makes it unique is it's almost entirely professional traders at T3 Trading Group that are in there. So if you want to get involved as a professional trader with T3 Trading Group, it's a conversation that we can have. And one of the best avenues to do it is to start by getting involved in the Pro Desk virtual trading floor. We're doing the morning meeting every day at 9 a.m., afternoon meeting at 10 after 4, constant strategizing going on in the VTF throughout the day. I'm on the radio a lot during the day. Pat's on the radio during the day. We're getting the news in there real time. We're large option order flow in there. So yeah, become part of the team. Robert here from YouTube. What do you think of TradeStation for equity scalp? I don't really understand your question, but if you're asking me what I think about TradeStation as a broker, I am not a fan of any broker that lets you trade for free. Because if you're trading for free, you're not trading for free. They're selling your orders out to HFT firms, which is causing you to get worse pricing on your execution. So I'm a proponent of trading on a professional platform. So like Interactive Brokers Pro, where you have to pay a commission cost, or T3 Trading Group has retail accounts that are meant specifically for the active trader. There are costs involved in doing that. There's monthly costs, there's commission costs, or by becoming a professional trader at T3 Trading Group. So you reach out to info@t3live.com if you want to learn more about how you can be involved in the virtual trading floor. Reach out to info@t3trading.com if you want to learn how you can open an account with T3, either on the professional side or on the pattern day trading retail account side. All right, I am going to end the meeting here. Lots of good stuff today. We're getting good lessons into the afternoon meeting every day. You know, good call-outs every day as a team. I'll see everybody tomorrow, where we'll do our morning meeting and everything else. So take it easy.